Hey everyone, you're listening to the Active Turnkey Podcast, a podcast designed for hands-off, passive real estate rental investors. In the Active Turnkey Podcast, you'll hear Tom Olson and Jared Stoutmeister discuss all things turnkey rentals with other turnkey providers, service providers, and rental investors. Our goal is to help you reach your financial freedom and whatever comes after that. Let's go. Hey everybody, welcome back to the Active Turnkey Podcast. I'm your host, Jared Stoutmeister, and today we have a special guest. We have Jerry Padilla from Prime Lending, and Jerry's worked with us for quite some time. He's been a guy we've worked with, we've sent some of our clients to over the years, and so he's going to talk to us today a little bit about what's going on with financing and his experience, what he's seen, and what that means for our investors today. So before we get started, Jerry, how you doing?
Good, man. How you doing?
Doing well. What you been up to?
Just working through this COVID and just trying to keep up with this demand for clients right now.
Yeah, it's been interesting. And of course, we've had the opportunity to work together, and it seems like we're talking on a daily basis when it comes to financing, but that's good. So tell our listeners a little bit about yourself, your background, your experience, and give us a little bit about yourself.
Yeah, so I've been in the business now for about 12 years now, and got into the business initially back when things were pretty crazy and having a good old time in the mortgage industry back in the late 90s. But got out of it for a while and decided to get back into it about 5-6 years ago now. And when I came back into the business, at that time, I decided that I wanted to focus on investors because the time that I took off in the mortgage industry to gain back into it, I actually started investing into property myself with my wife. So when I had first met her, she was in the process of flipping a house that she had lived in, and she had it completely gutted. So her giving me a little taste of renovation kind of got sparked interest. So then we finished renovating that one, rented it out, bought another property, flipped it, and then we're able to pick up a couple of rentals after that. So got a taste of being able to do the work myself and have an idea of what to do, and dealing with the ups and downs with tenants, and was able to make it a success with investors just because I understood the trials and tribulations that they went through to get to where they needed to go or where they're at, just because I've done it myself. So having a good understanding of the business itself, I think, helped, and having an interest in it was a bigger factor in it, just because it was something I love to do, and to be able to help other investors to grow and be able to get them to increase that portfolio and get to their ultimate goal is something that I enjoy doing, because that's the biggest satisfaction that I get, is seeing those investors get to that end goal that they're trying to accomplish.
Oh, that's an interesting perspective. I'm in the same boat. In fact, I'm working with Jerry right now on a deal of my own, and so getting into investing and building my own portfolio has really helped me identify with my client to understand the pain points. If anything, it kind of tells them that, hey, this kind of stuff happens, and I can give real life experiences of my own. It really does help, and say, hey, this is how it looks like when you're investing, and even prepare them a little bit if they're newer getting into the game. So no, I'm with you. That does help, and being able to tell them, hey, I know how it feels, but I'm in it. I'm doing it. It helps let them know that I'm not just selling them something. I believe in what we're doing, and so I'm with you 100%. That's definitely interesting to be able to talk through with your clients. So tell us a little bit what's happening in lending. What's changed since COVID? How are clients reacting? I know there's a lot of information there, but tell us a little bit about what's going on.
So as far as what's happening in lending, the conventional world is still active and 100% committed to doing deals, and they're not pulling back on any of the lending products for standard conventional deals. They have pulled back on some of the new construction and renovation products out there, but that's just due to the fact that the construction companies and the workers were kind of put at a standstill for a long
Mhm.
period of time. So they
Mhm.
weren't able to do anything. So there was no sense in trying to lend on that type of market if they weren't able to work at all. So that is slowly but surely coming back little by little. But as far as for the investor, there's nothing that really changed. There has been some a little bit more tightening of the guidelines
Mhm.
just because of the fact that you have to still be employed and have to be active during this process, just because it is validating your personal income to qualify for the loan. So instead of it being a 90-day or 120 days of documentation, they've cut it down to a minimum of 60 days from closing.
Mhm.
So they're just reducing the gap that you could have documentation to get qualified for a loan, which is understandable because we want to make sure that whoever's getting a loan has the ability to repay this loan back
Sure.
going forward. So um, I've had a couple clients that we've had to put things on a standstill until they go back to work because they got furloughed during this process. But
Mhm.
it doesn't mean that we'll forget about them. We'll just
Sure.
put them on the holding pattern until they're ready to be able to move forward on it. But it is something that has impact lending. So for people that are considered doing the forbearance and the payment forgiveness programs, if you're looking to wanting to continue doing financing, don't put yourself in that position because then you'll eliminate yourself to be able to get financing through conventional products such through Fannie Mae and Freddie Mac. So
Hmm.
just keep that in mind. I mean, it is nice to skip payments, but if you're wanting to continue to grow that portfolio, make sure you continue to make those payments so that you don't have that impact you.
That's interesting. I was even thinking about that myself from an investor. I have a couple of my own properties that will be turning over here soon. Seeing if that's not a strategy to take advantage of. But again, if I'm in the middle of wanting to do some cash out refinances and get more loans, it sounds like that's not a very good decision.
Yeah, so if you look at it from the investor standpoint, so if you're asking for payment forgiveness or you're asking for payment delays, they're indicating to me that you're indicating to them that you can't afford
Mhm.
those payments. So if they're saying that you're having financial hardship because you need this forgiveness of
Mhm.
payments, then they can't lend to you. So
Sure.
it makes sense. I mean,
Mhm.
it's a tough call to make as a investor, but when you're dealing with all these different programs that went out there when COVID happened, you got to do what you can to protect your best interest. And so it is considered hardship. So that's the reason why it makes sense that they wouldn't lend to somebody that's saying that they're in a hardship position,
Mhm.
even if they're only doing it to just keep that money on hand versus continue making that mortgage payment. So.
That is interesting, and of course, everyone's looking for an angle. So he kind of had that thought in the back of my mind. Is there a way we can use this to my benefit? But that's definitely good to take in here. What are you seeing right now in interest rates? If we ever have a lender on our show, we always want to ask them what they're seeing. So what are you seeing now with interest rates? Has it been affected by COVID, or has that been more consistent throughout this time? What are you seeing?
Um, if you look at the beginning of COVID to now, we've had some pretty good trends of lower rates from COVID.
Hmm.
So we have a little bit of ups and downs during that period, but for the most part, you're seeing that the rates have been pretty consistent. So depending on a client situation, they could get anywhere from mid fours to high fours and possibly up to mid fives. It just depends on their scenario. It will determine on where they fit in that spectrum of rates because credit scores, down payment, property
Hmm.
type, all have an impact on how an interest rate is determined. And also loan size has a big impact as well. So for the investor that's looking to do a sub 50K loan, you can't expect the best of the rates because there is less profit in those deals. So therefore there has to be a higher rate to try to offset as much of the loss that they make
Hmm.
on the smaller deals. But I mean, we're willing to go down to a minimum loan amount of 30,000, which is pretty unheard of
Right.
for most conventional lenders out there. A lot of conventional lenders want anywhere from 50 to $75,000 minimum, just
Hmm.
because it makes financial sense at that point.
Hmm.
And I've had this conversation with my management, and they agreed that $30,000 is something they would be willing to do to be able to establish relationships. And so that's that's the reason why we have the ability to go down that, is not because we want to lose money, but we want to establish those relationships for clientele, because we know that if we provide a good service, that they're just going to continue coming back, and
Mm-hmm.
it's not going to be 100% at 30,000 loans. You'll see a couple at the lower amounts, and then you'll see other loan sizes higher. It just
Right.
depends on the deal. So it's a numbers game when it comes to investing. So if the deal makes sense at 30,000, or if it makes sense at 100,000, an investor is going to make that choice to move forward, not to look at just a certain price point.
That's good stuff. Now, so you kind of segued into that. So let's keep on going. So if you're talking to people who are new investors, they're coming to you, and you have clients coming to you, I'm sure, all the time. They're on Bigger Pockets, and you're in Bigger Pockets frequently. What would you tell them as far as like why rentals? There's a lot of investment opportunities out there. Why would you recommend investing in rentals to an investor?
So my opinion, and I'm no expert when it comes to investing into the stock market or not investing into the stock market, but
Mm-hmm.
the benefit that I've seen in being in this industry, providing financing for rentals, is regardless of where the market stands, as long as you vet your tenants and you get good quality tenants into the property, that income and that's rate of return is always going to be there, because you're going to consistently get that rental income.
Mm-hmm.
And even if you're not seeing a high appreciation on a short term, but on a long term, you're going to benefit more over it, because regardless of what happens with the market, your equity position will grow. It may not grow as quick as you want it to sometimes, and it may go down sometimes, but for the most part, you're not going to see a crash like you saw when COVID hit and the Dow just crashed in a 48-hour period.
Right.
You won't see that happening in the housing market, because it just doesn't happen that way.
Mm-hmm.
So it's something that you're protecting your investment, and you're putting yourself in a position where you'll continue to collect rental income on that property for as long as you own it. And if you're keeping it as a buy and hold situation, over time, those mortgages will be paid off, and you're getting that and much additional cash flow on top of what you were getting when you had a lien against the property. So being able to leverage with financing for long term, and being able to cash flow during that process, and if it's a long term situation and you get into it in your early 20s, mid 30s, by the time you're ready to retire, you're not going to have any mortgages against these properties, and then it's going to be a nice passive cash flow for you, that you're not going to have to necessarily worry about not having that income come in because something happens to the market and now your rental income has decreased.
That is now you say that is an interesting trend. So when we first started selling turnkeys about 5 years ago or so, most of the investors that we dealt with were guys in their 50s, 60s, and of course they were looking to rapidly build their portfolios. Now we're seeing a trend of more younger investors who are learning and getting in, whether that be through family connections or what have you, or people just studying and hearing the talk, the chatter about the opportunities in investing. So are you seeing that trend yourself, or what are you seeing? Or is that okay?
Yeah, I am seeing a lot of trends of younger people than myself investing in and getting into the business, just because they've gone to the Bigger Pockets, or like you said, they've gone to friends and family that are doing it, and or they've gone to a local real estate meeting that they learned some information about investing. So it is something that you would want to get yourself into. The biggest mistake that you can make about looking into being an investor is doing nothing. So it's great about doing research, but until you actually get your hands wet and get dirty, you're not going to be able to overcome any other additional fears. So biggest recommendation to any new investor that's looking into it and is afraid to pull the trigger, just pull the trigger.
Yeah.
If you make a mistake, you make a mistake. But as long as you learn from those mistakes, you're going to put yourself in a position where you'll be able to understand that this is not what I do the next time around. And that's what we are. We're human. So we're bound to make mistakes, and that's how we grow, because of the mistakes that we made.
Sure. Yeah, that's really interesting. So Yeah, it's even more difficult when you're kind of making that jump on your own. You're trying to invest yourself, but working with guys like you, who so like in my experience, even me purchasing and using you as a lender, I've seen the more the assistance where it's not a strict lender client lender relationship where you really are working to try to educate me even, and I have some experience, but even educate me on that side of things, or I'm guessing your clients as well, where they're not necessarily making these decisions alone, and even getting some help as far as like you just already mentioned minimum criteria and all these different information that they can learn. So that's definitely interesting and helpful. So we've discussed the front end. So guys jumping in and getting started, what to look for in a situation, and why rentals. In this case, moving on again, many of these questions we'll ask over and over again to lenders, but now we kind of segue into a seasoned investor, someone who has got a foothold now and has got an imprint somewhere. So now they have 10 to 20 properties, and they're all leveraged. They've maxed out their Fannie Mae slots. How would you help this client, your client, someone you've worked with, helping them get to that point? How do you normally help them, especially as they're looking to add more leverage deals to their portfolio? What do you do? What do you recommend? How do you help them?
So I was able to, through relationships, find a commercial broker that works at a national basis to help those clientele and get them in a position where he has access to a plethora of commercial lenders throughout the nation to help them continue to grow that portfolio. Given current circumstances with COVID, his options are limited right now. And that's only because those commercial lenders or portfolio lenders are limited themselves. So they're only able to handle what's being provided to them at the moment. But given time, I think that stuff will open up. Investors just need to be patient, and it could be upwards a year before you see the hose will open back up to full throttle again. But it's something that they have opened back up because they did shut down for 3 months and put themselves in a position where they're able to start lending to just at a stricter criteria. So for your seasoned investor, it shouldn't be a problem to find them a solution just because they have the experience and they have the history of the rental that the investor commercial lender is looking for. But it is something that he is able to help me out with clients, and anywhere from being, like you said, a 15 to 20 portfolios or all the way up to 100 plus portfolio. And in that world, believe it or not, once you get over the $1 million mark, the opportunity for lending opens up tremendously versus anything under that mark, just because those lenders that are in that realm of the million and above are wanting that product mix with clientele. So it's not something that they're limited on what they could do, but it's in that million and below for commercial lending is going to be a little bit tougher at the moment, but I get him to him. He continues to vet, and on a weekly basis, he's reaching out to all his lenders to see who's changed what, because it does change from week to week right now. So there's been some opportunities happen where we didn't have a month ago. So it's something that he's consistently following up with me, letting me know what's going on. And once he is able to find something, he tries to act upon that as quick as possible and try to get these guys in the position so that he's capable of taking care of the clients as soon as possible.
Now, you kind of touched on something. When investors are working with you, they can buy the one property, one at a time type situation. Now, of course, some guys buy more than one at a time, but even in our relationship, some of our clients, they buy one property, and then maybe 6 months later, a year later, they're buying another one. When it comes to the commercial side, so they have their 10 to 20 deals, is it better for them, or does it look better from the lender's perspective when they're adding beyond that on the commercial side to have more than one, to have multiple options? Is the bigger the chunk better than at that point, like you mentioned?
In the current state, yes, it is, because they see that you have the experience. So the experience is a big key factor
Mhm.
in today's market for commercial lending. So having that experience is going to make the commercial lender looking. The other thing that they're wanting to see is liquidity too. So if you're asking to borrow $800,000 for loans, they want to see that you have at least $800,000 in liquidity to be able to show for that. So that's important in the commercial
Mhm.
world right now, just because their options got limited.
Mhm.
So they have to be selective on what they're lending out to. So they want to make sure that what they're lending to is a solid portfolio and putting themselves in a position where that portfolio is not going to fail on them.
So that's really interesting. I appreciate you sharing that. And again, that's a place where a lot of our clients are getting. So we've been selling properties now for quite some time, and our investors are now getting to the point where they have their Fannie Mae slots full. So that is definitely something we're looking for, and looking to provide for our clients as opportunities to add more beyond the 10 to 20. So we'll kind of, as we start to close this, I did want to discuss, you've been, like you mentioned, you have experience in lending, and even the last 5 to 6 years, specifically working with investors in this field. What are mistakes that you see, and you see investors make, and then also what are some good things that you're seeing investors doing on both sides of it? What are you seeing from your seat?
Mistakes that I see, and the number one mistake is not doing anything. So I mean
Mhm,
that's the number one mistake. If you want to be an investor and you're not doing anything, then you could very well lose the opportunity that's available today in
mhm,
today's
mhm,
market. Just because there's a lot of opportunities there today, but 6 months down the road, those opportunities could be gone, and now you're trying to get involved at that point, and there may not be anything to capture at that point that's going to make sense. Um, Other mistakes that I do see some new investors make is they get emotional about property,
mm,
um,
mm,
instead of looking at it as a business decision. So when you're getting emotional about a property, you can't do that. You gotta keep it as a business decision. I understand that, and I don't take it personal if you back out on the deal
mhm,
midway through the process, because there's something that just the deal just doesn't make sense. It's a business decision. So if the numbers don't work, or if there's something on the property that has caused a bit of concern for you,
mhm,
and that business decision has become a good one to a bad one,
mm,
then learn to walk away from that. Just because you're going to put yourself in a position where you're going to create more headaches in the future,
mhm, mhm,
um, than you are going to gain from the potential of the income that comes into the property. So those are the couple things that I've seen where investors have done. Good decisions that I've seen investors make is that they find
mm,
an area like yours. I mean, I see a ton of business come out of Indiana, and they don't go anywhere else. They focus on those areas, and then they capitalize on how many properties they could buy in the location. And having good property management is a
mm,
key factor, because majority of the investors that I work with are out-of-state investors. They're not living in Indiana. Majority of them are either living in California or Texas. So it puts them in a position where they're relying on a property manager to manage their portfolio and put themselves in a position where they're cash flowing on a monthly basis. And they're not getting taken advantage by property manager and saying that every month we have X, Y, and Z additional expenses because something happened, which it's going to happen. I mean, that's part of the business, and that's, things are going to happen. Tenants are going to break things.
mhm.
It's just part of the nature of the business, just because
Sure.
my experience is that renters don't really care about the property as much as a homeowner. And so you got to know that that's going to happen. So when you're doing your numbers, taking that into consideration.
Mhm,
But having great property management is going to be key for out of state investing. And depending on what the investors want to accomplish, is understanding when to buy cash and when not to buy cash.
Hmm.
Um,
Interesting.
those are good decisions that I've seen happen. When an investor sees that they have an opportunity to buy something that's below market, they buy it cash.
Hmm.
And then they come to me afterwards and say, hey, Jerry, I want to go ahead and refinance this. And now they put themselves in a position where they're recouping all that cash that they put into the deal.
Hmm.
And they're, at the end of the day, they're little to no money out of their personal pocket because they were making a good decision to buy
Hmm.
it cash versus buying it with financing from the beginning.
Hmm.
So if you're buying a property that's at market, then you buy it with financing because you're going to put yourself in a position where you have the best cash flow and the best scenario for out-of-pocket costs. But when you have that opportunity to buy below market, do whatever you can to buy it with cash and go ahead and obtain long-term financing afterwards, just because you'll be able to capitalize on the abilities of the financing aspect of it so that you could get yourself into that. And that's similar to your deal that we're trying to close up for you this month.
Hmm.
Is you bought it below market, and
Right.
we're trying to recoup as much cash for you as possible. So then you're coming out of it to little to no money out of your pocket, so that you're
Hmm.
putting yourself in a position where you're cash flowing, and it may cost you a couple $1,000s instead of costing you 10 to 15,000.
Sure.
So that's good decisions that I've seen made, and that happens so often. And just educating new investors on
Hmm.
that concept is because I've had investors say, "Hey, well, I'm going to buy this cash, and then I'm going to refinance it afterwards." So my first question is how are you buying this property?
Hmm.
And when they say that they're buying it off the MLS system, I'm like, well, why are you buying it cash then? And they're like, well, just because it looks better for the seller, then I'm buying cash. I'm like, well, that doesn't. If you have a conventional deal, they're not going to see that much of a difference in between
Hmm.
that. It's not like you're going to close sooner with a cash deal than a financing deal. It's not that much of a difference. It may be a couple week difference, but
Hmm.
you're also protecting your investment by putting it into a long-term financing if that's your ultimate goal. Now, if you plan on buying all these properties cash and keeping them free and clear, then more power to you.
Hmm.
But if it's something that your long-term goal is to finance that property over time, then just make sure you evaluate the deal and determine which is going to be the best case scenario.
That's
So
really good. I did want to get into you talked about some mistakes that investors make. And I was wanting to get into, you mentioned they get emotional. Do you have like an illustration that you can give us to a scenario? It doesn't have to obviously be exact. I don't want you to call it any clients or anything, but but just kind of like a typical emotional thing that happens to people where they may get attached or may panic or what have you. Do you have an example for us?
well, I've had situations where clients get overwhelmed and they get themselves in a position where they're maximizing on their cash that they have on hand.
Mm.
Their debt to income ratios are tight, and they're wanting to get into the business because it makes sense.
Sure.
And when you're trying to put yourself in a position where you're not 100% comfortable to move forward on that and buying a deal because the deal makes sense,
Hmm.
but if it's going to put you in a financial strap situation in 3 months down the road, how is that improving your position? So just making sure that you have enough cash flow to handle the transaction that you're purchasing, and you're not going to have any issues in the future because you've let go of this cash up front, and now you're cash poor on the house, but you're collecting rental income. So having that aspect of it is keep in mind of reserves. That's sometimes investors try to go ahead and get into their first deal,
Hmm.
um, but then they leave themselves with no reserves after they're done. So if you're brand new to the business and you don't even own a home, then consider doing a house hack.
Mm.
Not everybody likes to do that scenario,
Sure.
but it's a great way to get yourself in a position to get your first investment and build some equity. And hopefully over time, it'll get you enough equity to get to the next investment deal.
Hmm.
Um, that's truly the best way for a young individual to get into the business is by house hacking,
Mm.
going with very low down payment options on those scenarios, and then putting themselves in a position to be able to um, tap into that equity. It's not going to be something they'll be able to do it quickly,
Hmm.
but they'll be able to put themselves in a position where they could invest into future properties down the road.
It's really interesting. We actually have an employee here who's looking to do the same thing, getting house hacking. I told my son, he's 16, and he's actually investing here in the company, lending some of his money. He works for us, and he's lending to the company, which is pretty cool opportunity for him to learn. But teaching him the house hacking concept, and it's pretty awesome. And you can get them at that young of an age to understand opportunities investing, and so we'll see if that's the direction he goes. But it's interesting now to give them that opportunity. And so Jerry, I really appreciate your time today. Do you have any other closing thoughts, anything you're seeing or anything you're thinking from our conversation, or just in general with what you're working with?
Um, just if you have questions, don't hesitate to ask people. The good old saying that closed mouths don't get fed. So if you have a question, open up that mouth and ask those questions. I mean,
Mm.
I've seen more experienced investors, experienced financial advisors, experienced loan officers, experienced lenders that do hard money lending, willing to provide information at no cost to an individual if they just ask. So don't be afraid to ask, and don't be afraid to network with people. There's a lot of people out there that are willing to provide their feedback and their thoughts without having to charge you for that. So don't be afraid to ask questions when you don't know the answer to it. And if you don't know the answer to it, don't keep it to yourself, because then once you make that mistake, then you're going to put yourself in a position to find out the hard way that that's not the right way to do it. So for any new investor out there, even existing investors, seasoned investors, never stop asking questions, because the moment that you think that you know everything about investing is the moment that you've gone wrong, because everything changes. Nothing stays the same. There's not a single product out there or anything in the investing world that has stayed consistency from today versus 5 years ago.
Mm.
So always ask questions, and always understand, and always educate yourself, and put yourself in a position where you understand what's going on in today's market,
Mm-hmm.
not what happened 6 years ago or 10 years ago or even a year ago.
Mm.
So don't ever stop learning and educating yourself when it comes to all aspects of investing.
No, you're absolutely right, especially about the volatility or the fluidity of the market, of what's happening. I think that's great. I mean, we're seeing that with different markets. You can see stuff shifts that happens. We're seeing a pretty aggressive shift in Gary, Indiana, in a good way, but that can go in any other way too, as well with other different areas. So I think it's absolutely right. Asking for information. So yeah, so Dick, and this is Jerry. I really appreciate Jerry getting on here and spending some time with us today. Again, I've worked with Jerry for a long time. I don't know how many deals we've worked together, but it's a lot of deals. So I really appreciate everything you've done. And so remember also, those of you who are listening, Olson Group and listen to the podcast, Olson Group does provide opportunities. We do build rental portfolios for investors. So if you're looking to add to your portfolio or begin to start investing in real estate, we'd love to have the opportunity to help you. You can reach me at jared@buyolsongroup.com, or you can visit us at buyolsongroup.com, and we'd be happy to get you on our list, get you some information. And like Jerry just mentioned, we get the best thing is to ask questions, learn, and hear. And I think, Jerry, I think probably one thing you'd probably agree with is just listening to how people answer questions. Are they trying to sell you something that you don't want? In the end, it's really important to know who you're talking to, who you're asking questions to.
Yeah,
do you really know
absolutely.
what they're talking about, or are they just talking? I don't know if you want to add to that.
Well, I mean, a perfect example of what I mean by successful people that are doing the business is Tom Olson, who's your founder and CEO of Olson Group, buyolsongroup.com.
Mm-hmm.
I mean, he felt the need to make sure that he educated people as much as possible. So he wrote a book to help those people to understand the active turnkey and
Mm-hmm.
how that could improve their lifestyle by creating passive income. So
Mm-hmm.
again, there is a lot of people out there that are willing to provide that education. Just make sure you go out there and look for it. So it comes back to what you just said. Make sure that you listen to those answers and you listen to the key points of somebody that's actually trying to give you education versus somebody trying to sell you something.
Mm. No, that's really good. I really appreciate you for joining us. And that's all we have today for the podcast. So again, if you have information you want to talk to us, you can reach out to me. I can also get you connected with Jerry if you're interested. So you can email me at jared@biosilgroup.com. I can get you connected with Jerry if you're interested in some financing opportunities. And that's all we have for today. So I appreciate your time. Thanks, guys. Active Turnkey, the best way to buy rentals. See you guys.
Olson Group Network makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice. Unless specifically stated otherwise, Olson Group Network does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. Any third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of Olson Group Network. Olson Group Network assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast or the compliance with the applicable laws of such materials and/or links referenced herein.